There is a very specific type of trader that comes through the NJT doors. You've been trading for a few years, you've tried a few different strategies, and you're at the stage where number one, you can't execute your strategy without emotional errors, or number two, you still need to learn something about the market to enter trades in better locations so that you can stop taking unnecessary losses and improve the amount of winners that you get. So if this sounds like you, make sure you keep watching. You can change both of these very easily with two things that we provide. Number one, the Flawless Execution Psychology course that I'm currently working on, which will be out in the next week or so. Number two, the Trading Missing Pieces course. The focus of the Trading Missing Pieces course is to get your eyes focused on the highest probability locations and to be able to read the price action moving into these locations so that you can make consistent good decisions. You'll be able to understand how to trade the three different market structures to make sure that you're taking trades in the best locations in those market structures. That is going to maximize your profit potential, and that's going to keep you out of losing trades, trading in the middle of the range and trading at low probability locations. So those two are a must watch for every trader. So guys that are on the fence about joining us, continue watching this video because I'm going to share with you the key to trading in high probability locations with my two-step system. The two things that we're going to use, number one, direction, and number two, trading location. Direction can be broken down into market structure. So understanding, are we in a trending market structure? Are we in a sideways ranging market structure or a consolidation? Or are we in an initiation market structure, which is a very volatile market structure in one direction? The Fibonacci tool is what we're using to understand A to B points as per the structure within the market, the highest points to the lowest points, to understand high probability and low probability locations on the charts. Of course, the only time where we can't use the location tool is when we're in an initiation structure, because price is just moving in one direction. There isn't going to be any pullbacks within price, so that's the only time we cannot use the location tool. So this video is going to be an insight into how we use these concepts at NJT, and how our traders are able to catch 10% profits on a consistent basis. We have two different strategies. We've got the 15-minute strategy, which is my strategy, which is a lot slower. I go for 1 to 4 risk to rewards, and that can be traded at any time of the day. I trade it during the New York session because it's the best time to trade it. Or we've got Chuck's 1-minute strategy, which can be traded during London or New York session with risk to rewards of 1 to 10s. So depending on your personality type is what you'll learn inside NJT, but you'll get access to both of the strategies and the rules for both of them. So let's get into today's video with my two-step process. Okay, so let's just start here by understanding the current price action. So this is a sideways range here between this high point and this low point on the charts. We've run all of the liquidity inside these highs here, and then we've moved in the opposite direction and we've broken the previous low. Now, prices come back up here in the future because this is also a sideways ranging market here, and we've broken through the high of this sideways range. So this sideways range here is no longer valid within price. And then we look at the next sideways range. Until price takes out the high of this range here, we can come back into this same area multiple times in the future and still play the same intention in the future again. So we can now see that price is reacting from this sideways range here to the left again, and we're seeing the intention here to the downside in the form of continuation structure away from this area. We're also reacting from this sideways range here. We can see that price was contained sideways in a consolidation market, followed by an initiation here to the upside, and we've reacted from here again in the future, and now we're seeing continuation structure away from this location. So right now, these are the two areas on the charts that price is reacting from. We're always reacting from a sideways range to the left here on the charts. And then on the right hand side, we're always looking at the reactions and playing continuations away from these directions. Now, the reason I say continuation structure is because we need to understand when the price is changing. If price is just aggressively moving into this location, that's bearish continuation structure. If we're moving away from this location in a trend, that is bullish continuation structure. So instead of just saying that price has to react out of either one of these two areas and just playing a reaction, if we wait for the continuation structure away from these locations, then we know that we're trading alongside the trend and alongside the intention that's currently in the market, because price is showing us that it wants to move in that direction. So that's very important to understanding when price is turning and trading alongside that intention. Now, the reason that we're looking for sideways ranges is because we're utilizing our pattern of RIMC. If you're not aware of this pattern, it is range, initiation, mitigation, continuation in the market. The range is showing the high volume area on the charts here, where price is contained sideways, as we can see here. We react from here in the future, so that is telling us that there is volume inside this area. And again, this one up here, right? We've got sideways range, initiation, price is pulling back here in the future. We get one reaction, and now we're coming back into that sideways range again. So we can just play the same price delivery, sideways range, initiation creates this low, which is this low down here in this initiation to the downside. We pull back into that sideways range in the future. We get the first reaction from price. That pulls back into another sideways range to the left. And then we're in that continuation structure back into that same sideways range here in the future. So this is how we use RAMC to understand the narrative of price and start to build a story and an understanding before price even gets into entry areas, or before we even want to start to look to take trades within price. It's very important to understand the narrative of price first and the direction, which is the first part of this two-step process. Now, the second thing that we're going to use is market structure. So once we have our narrative and our understanding of direction, we can utilize market structure, which has higher highs and higher lows within the market, to understand where price is going. And continuation structure is only important when we're coming from a previous sideways ranging market, because then we can play alongside that intention. So we can very clearly see right now we have bullish continuation structure, but we are coming into an area where we anticipate we might start to see a turning point within the market. Now, if we just read the price action right now, we've been in a bullish initiation structure here to the upside. We've seen a strong rejection of higher prices here, and now price is starting to move sideways, right? Starting to move and slow down sideways. So let's just play this forward, and we can very clearly see, of course, timing is very important. This is Asia session. We don't typically see the biggest moves during Asia session, but we can see when price is running below these lows here, we're not extending to the downside, which is showing that price is overall sideways and in a sideways market or a consolidation market. So when it comes to understanding direction, yes, we're in a bullish trend, but we're coming back into a point of mitigation here from a sideways range where we could anticipate a turning point within the market. That means we want to see price slowing down moving into this area. Now, what does slowing down mean? Well, if we're moving very aggressively here, we're going to be breaking through highs and extending and seeing continuations. As we see here, we break through this high, or we extend, and we're seeing continuation of that extension. That's showing that price wants to trend in that direction. Now, when price starts to slow down, we'll be running above highs and we won't be extending, and we'll be moving in the opposite direction. This is showing that price is slowing down versus price moving very fast. So when we're starting to anticipate reversals happening within the market, all we need to do is identify high points within the market and watch how price is running through these areas and seeing if we're getting extensions, showing that price wants to continue, or we're getting strong rejections, showing price wants to move in a sideways ranging market and slow down. So this is just reading the price action, right? This is just understanding highs and lows, to understand the direction within the market and to just read the price action moving into these locations. So let's put this high on here now as well. And let's put on our how did we break. That's also very important. Now the second part that I said, so now we understand the direction is of course bullish, but we're anticipating a potential reversal if price runs this high into our sell area on the charts that we've already identified before. So now we need to think about location, right? Now we've understood the direction, we understood a potential turning point within the market. Where's this turning point happening? Well, if we look at our lowest point to our highest point, which is here, and drag this across, we now have our high prices and low prices on the chart. The best area to sell is always the top 25%. The best area to buy is always the bottom 25%. If this lines up with a previous sideways ranging market over to the left. This is what the Trading Missing Pieces course will teach you, is to understand these specific locations on the charts that will line up with your trading session and your setup to give you a very high probability trade with massive risk to rewards. This is everything that Trading Missing Pieces is about, breaking down all of these concepts to look in these specific areas and train your eyes to see these specific areas on the charts. So that's our trade location, right? We have our potential reversal at a good location, which is extremely important to maximize our profit potential. Now it's about reading the current price action moving into this location. So let's just play this forward. Here we can also see that price is setting up liquidity, again a low followed by another low right next to each other, which is a sign of a reversal as price is approaching this high here. If we're setting up liquidity in the opposite direction and we're coming into a location where price could reverse, this is the first sign that price may want to turn from that direction. So price is always going to leave us clues. It's up to us to read these clues utilizing the concepts and put them together to formulate a higher probability trading idea. So let's just play this forward. Here we can see the price gets continuation up into the high. We take out the previous high, and what did I say about when we take out previous highs, right? We want to see price slowing down after we take out this high. So we run above that high, we do not extend, right? If we extended, we'd run through that high and would see continuation of that direction. We can see we run above the high and we didn't extend. That is known as a strong rejection of higher prices, which is also the sign of a fractal high, which is also a turning point, and also the sign of price slowing down and ranging, which is exactly what we want to see as price is moving into our turning point. And the reason we want to see price slowing down and moving in a sideways range is we know that inside sideways ranges or inside consolidations, the next big move is being created for the next phase of price, which is always the initiation out of the sideways range. So when we start to see price running above the highs of the sideways range that's being created and we're not extending, that's showing that price doesn't want to continue in that direction, which is the first sign that we might start to move in the opposite direction. Now, like I said, if this lines up with the session, we can see how many things are now in our favor for this trade idea to potentially play out in our direction. And again, all we're doing is just identifying things that we already know and just putting them together. Once you've gone through the Trading Missing Pieces course, you will know all of these things. You will have a playbook and an understanding of how all these concepts work. They'll be ingrained in your mind so that when you're seeing them on the charts, you can formulate these things together and build these high probability trading ideas. So here we go. So we've got a fractal high into the edge, which is that top 25%, which is our potential reversal location. We've run above that high, we've had a strong rejection, and we're starting to move here in the opposite direction. Now, if you're trading my 15-minute strategy, we can see that we have the fractal high printed here, which is the sell order that's coming into the market. So now we're just waiting for the market to open during our trading window, and then we are going to sell at market open. The reason we're selling at market open is because we already have our direction within the market. So let's just play this forward here. And that's market open right here, right at the top of that candle. We always have a 10 pip stop loss and a 40 pip target. If you're saying, why have you changed your risk to reward for a 2.5 to a 3 to a 4? I've adjusted the way that I trade my system so that I swing trade my system with my day trading entry. That maximizes the potential profit on the moves so that now I can go for 1 to 4 risk to rewards. So once we've run above that high, then we can play the opposite direction at that selling location. Let's just zoom out and look where price is. Overall, we're coming back into that previous sideways range. We've slowed down here in the future. We've created that fractal high, and now we're moving in the opposite direction. And we're at high prices, so we're selling a high overall, trading with that direction in the market here to the downside from this point of mitigation here. And this was a potential setup to get involved in that saw obviously a really nice strong move here to the downside for that continuation here to the downside as well. Now, what else can we also see? That's a selling idea. Following the concepts, we also have something on the other side, right? We have this bullish trending market here. Obviously, we'll adjust this high to the new high. That is the new swing high. So we have our A to B price range, right? Now, inside that A to B price range, we can see that we had a swing structure break here on the 15-minute chart. And this is a sideways ranging market. Again, we can see prices slowed down. We run above that high. We didn't extend and we pulled back in. And then we saw initiation and we broke through and saw continuation. So this is our identification of a sideways ranging market that we can also look to play here in the future. We have a swing structure break that's showing our intention for higher prices. And overall, we're in this bullish trending market and we're in that pullback of that potential continuation. Something really important to understand is how do we break through this high? Well, we broke through here and we extended through. We didn't break through and have a strong rejection. We broke through and we extended. That's showing that price wants to trend. So when we come back into previous sideways ranges, this is where we can play our RAMC concept, range initiation. We pull back into that sideways range here in the future. We get that mitigation phase, which is exactly what we see here. Now, if my 15-minute strategy lines up with this execution here during the specific time and we get our candlestick formations, we can play that as our entry for that overall direction into the previous high. And that is the RAMC concept. It's very easy once you know how to identify these concepts because all we're doing on the charts, right, as a trader is just identifying concepts. So once you do understand them and you have the rules written down to identify them, it becomes very easy. All we're doing is just observing price at good locations and executing our trades during our specific time window. It becomes very simple and very easy trading. So we see here we created the fractal low into that point of mitigation, which for me in my 15-minute strategy is a reason to look for a buy. We get our candlestick formation and we execute the trade there with a 10 pip stop loss on the close of that candle. And then we're playing that as our continuation there to the upside. And that's another potential opportunity to get involved in a buy continuation, utilizing exactly the same concept. This one is a reversal because we've run above that high and we didn't extend at a good location. This one is a trend continuation because we extended through that high. Then price reacted from a high volume area and gave us our candlestick formation on the 15-minute chart to play that direction overall within the market, which is our RAMC concept. And this right here is how we understand every single market move. Every move in the market is following a narrative and an understanding. So if we can apply our price action concepts onto these understandings, we can formulate high probability trades that are going to give us positive risk to rewards, so that psychologically we don't have to worry about winning every single trade within the market. We can put our minds into the probabilities of flawlessly executing our setup over and over again, which is what you'll learn in my psychology course. And then just allowing the concepts and the strategies to just work for us and the maths of trading to just work for us. Thank you all for watching. I hope you enjoyed this video on the charts, and I hope you learned a couple of things about how we break through highs and lows and when price is slowing down. If you did want to take our advanced price action course, Trade and Missing Pieces, visit our website at notjustatrade.com. As I said, the psychology course will be out the end of this month so that you can start to eliminate all of those emotional errors within your trading and flawlessly execute your strategy. And if you want to learn my 15-minute strategy, you can do. Again, this is all included in the community. And if you want to get one-to-one coaching from me and Chucks, make sure you message us. And in there, we are going to guarantee that you become consistent. Make sure you leave a like and a comment, and I'll catch you guys on the next video.